So the next one here, we've been talking a lot about credit. You point out a chart here that commercial bank credit, which is the loans that banks make to businesses, has really topped out here. Once we entered into 2023, which I'll note is right after the big spike in interest rates, you really have seen the level of commercial bank credit level out at about I think this is in trillions,
Yeah,
or is that
17.5 trillion or so.
$17.5 trillion.
Yeah.
What's your, look, this is another subject that could be, I don't want to call it nuanced, but there's a lot of takeaways that could be taken from this. Some of them are subtle. What's your view? What does this mean for folks?
By the way, I think that's the right way to frame it. I have a view on it, which I'm going to share, but I readily acknowledge there are other people who could look at this data and draw different conclusions and make strong arguments on the other side. And to the extent that any of you listening to this have a view, you think we're wrong on it, or I'm wrong on it, put it in the comments. Love to hear from you. This is one of those things where Enrique is right. It is nuanced, and there are smart people who will disagree with me on this, and that's totally fine. Give me your view. Love to hear it. So we, in the previous segments, we're talking about increasing use of consumer credit, and it's true. And Enrique's right to point out that, yeah, it's more credit usage, but it's also on higher employment, higher incomes. That's a fair point. On the commercial side, I'm looking at a chart right now for almost 2 years. It's been flat. And what that's telling me is two things. One is that the private economy is not growing, right? That's the thing, that when businesses are growing, they go and get credit so that they can expand. And we're not seeing that. And so what's the second point of it? The second point is, and we've talked about this on the 5 things and at least twice so far this year, is that the GDP numbers are being faked, and they're being faked by the government. And just another reminder that government spending adds to GDP, gross domestic product, whether it creates value or not. And so as the government spends more and more and becomes a larger and larger part of the economy, I think what we're seeing is that government spending is flourishing, government employment is flourishing, government use of credit is through the roof and has gone parabolic. We're in the ludicrous part of bread and circuses now. But the private economy is struggling. And that's what I'm seeing here. And so when we get, I think it's later this week, we get the first quarter GDP number. When we get that, it is going to show a positive number. But the last quarter, what we saw was increase in government debt exceeded the increase in GDP. In other words, government spending has a negative return, and it's pushing out private market spending. And I think that's what we're seeing on the commercial bank credit graph that, will flash up on the screen. Andrew will make sure it goes up there. That's my take on it. But again, I acknowledge other people might look at this and draw a different conclusion. Enrique, what are you seeing when you look at commercial credit usage in the economy as a whole?
Yeah, look, this chart is very highly correlated to interest rates. We went from free money to not free money. Interest rates went from 0 to 5 on the short end of the curve. And if you were to plot the level of interest rates over this, you would look at the velocity. And I think there's just a lot less people are interested in borrowing at 5. I'm using, again, the short end of the curve than they were at 0. The other thing is, I think if you look at the aggregate amount of debt that was issued in the course of 2020 to 2022, it was massive. People credit actually to hundreds and hundreds of CFOs and controllers. They were like, free money, sign me up. So, I struggle. It's funny. I agree with all the stuff you're saying about the government spending, buttressing the economy. I don't know that I personally read anything into the private economy about this. The other reason, too, is that this commercial credit really addresses larger enterprises. Smaller enterprises make up a much smaller portion of this. So, I think if this were to persist for another 18, 24 months, I'd start to make real reads about the economy. And this is not me disagreeing with your other points about the government. I just think that, we're looking at a period where with zero interest rate ZERP, zero interest rate policy, large corporations borrowed a crazy amount of money and took advantage of it. And now they're just sitting on their cash because they're profitable. It's not like they're losing money, they've got cash flow to invest, et cetera. So I kind of put this as a push for the economy as opposed to either a negative or a positive. So this is where we agree on a lot, but maybe the nuances